Hey, welcome back to the Higher Expectations podcast with the Higher Advantage Real Estate. Today, it's just going to be Ron Hier and Michael Hier.
Hello.
What's going on today?
Oh, it's not much. It's Tuesday. It's a great day. It's a great weekend. You know, wife just celebrated her birthday, and Halloween's this Friday.
I think it's Halloween. It always amazes me how crazy things get when Halloween is actually on a Friday.
Mm-hmm.
The day before the weekend, everybody just gets nuts.
Yeah, it's been a few years. I don't know how many years it's been since Halloween's been on like a Friday or Saturday, but
yeah,
I don't know. A lot of people talking about big parties, though.
Oh, the parties galore. Probably started last week.
Yeah, definitely. I don't know.
So we're talking a little bit about real estate, and you got something a little bit different, not different, good for you in your life about the whole life insurance policy that we were talking about before.
Mm-hmm.
And there's some cool things about that particular one that I wasn't aware of.
Absolutely.
That has some benefits. And tell us a little bit about that.
Sure, you want to talk about that now, or we can talk about that later? And
I don't care. We
sure.
We can talk about it later.
I mean, the thing is, I don't have. I'm not a life insurance salesman, so or a financial advisor, et cetera, right?
Uh-huh.
So there's a ton of facets that go into life insurance. Of course, the most obvious is going to be what's called the death benefit, right?
And so we don't really want to use that part of it. So
no, eventually everybody uses it, you know, if eventually, right?
No, I mean, if you live past your life expectancy, then no, you don't get to use it.
You don't get to use it?
No, it expires.
I'm not aware of that. I'm sure there's probably tons. Again, I'm not a life insurance salesman.
I'm not either. There's
probably tons of different policies with different, just like loan products. There's a ton of different stuff where, you know, you refi after 7, then every 6 months, or an ARM, adjustable rate mortgage. There's probably a ton of different life insurance options, but
or maybe there is. I could have been wrong. I was thinking to myself, well, almost all of them expire, but I'm sure there's some out there that never expire, just in case.
Mm-hmm.
Go ahead.
Right, and so I was talking with my life insurance guy, and we enrolled into a whole life policy. So on top of the standard, like everybody thinks of life insurance, just having a death benefit, which means when the insured passes, the beneficiaries receive whatever amount the insured is covered for, right? Whether it be $250,000, $500,000, million more, you know, multiple millions, the beneficiaries receive that amount. So on top of that, whole life also acts as like a savings account that pays you dividends. So I know tons of guys that are into stocks, stuff like that, looking at
Return.
Return, exactly. Like, what stocks pay out big dividends? What's out there right now? Like AT&T, Waste Management, Coca-Cola. Exactly. Yeah, a ton of companies like that, you know, pay good dividends and, you know, keep your portfolio diverse. This is just another, you know, avenue to put money in that's also going to pay you dividends, high ROI. It's very safe and stable. Mm-hmm. And you can also borrow against it later on. So, and again, life policies, you know, you're supposed to have them for extended periods of time. These aren't like 5-10 year things, right? Mm-hmm. These are long-term investments, you know, especially the younger you start, right? Because if you start when you're 20, it's like a 401k. If you start a 401k when you're 50, it's not going to pay you nearly as much as if you started it when you're 25.
On top of time. Yeah.
Absolutely. Yeah. Compounding interest and all that. So, the great benefit of whole life is that you can pull out loans against your balance that you've already accumulated over time for free. It's also tax deferred.
That's good. It's your money. So that is a very good way to do that. And as opposed to getting a loan and having to pay interest on it, you put money in and you get the benefit of it increasing in value, and you get a dividend. And then sometime down the road, if you ever wanted to pull it out, it's your money. You don't have to pay taxes on it because you probably already paid taxes on it.
Exactly. Yes, this is all after tax. So something that wasn't sure quite about, but I was reading a little bit. And again, you know, if you have more questions, either talk to us and we'll connect you with the life insurance person. Sure. Or if you have a financial advisor, check with them, or your own life insurance person, check with them. If you were to, you know, say pull a loan against your own policy, what what I was reading is that the policy acts like, or I'm sorry, the cash value acts like you never pulled money out of it, and it continues to build dividends off of the whole value. So, for example, if you have $100,000 of cash balance and you pull out 50, it still puts dividends or builds dividends based off the 100,000.
Wow.
At least that's what I read.
And
I hadn't verified that.
Based on the fact that you're going to pay it back.
Exactly.
Maybe that's why.
Yes, exactly. Yeah, because you still have to pay yourself back, but you're not paying a bank and you're not paying interest. So it's probably one of the best things that you can do. Be your own bank. Anyway, that's something that
that's the best way. Be your own bank.
Oh my gosh.
Pay yourself interest.
Yes.
That's a good deal.
So, the younger you start that, the better. And even if you don't have it, start something for your kids, something like that. But because real estate's not just about buying and selling a house; it's a whole financial picture.
It's huge,
Right. So that's kind of why we wanted to start off right there.
Do that because that's fresh.
Absolutely, yeah. I just like I said, just enrolled in that policy.
That's good.
I converted it from a simple. It's called a term policy, where a term policy is all it does is it pays a death benefit. It gives no other benefits beyond that, but it is relatively cheaper based on your health factors and your age and other items that they may ask you.
All right, so going on to a livelier topic.
Yeah. Yeah.
We're talking about some real estate now.
Sure.
All right. So one thing that has come up in the let's say most recent past, in the last couple of weeks or something, is like, where's the market headed? And is it a good time to buy now? Or should I wait till the interest rates go down? What have you heard, Michael?
I mean, I've heard people ask all sorts of questions saying, like, well, how does the market look right now? And it doesn't matter what time of year or what year it is, they always ask that same question.
It's a common question.
They're saying, what are buyers doing right now? Are they waiting for interest rates? A lot of what I'm hearing from sellers or potential sellers and people, right? So we talked to a ton of people, is that they believe that buyers are waiting for interest rates to come down. When I checked yesterday, I didn't check today. And again, mortgage rates change every single day.
Check right now.
Yeah. I believe a 30-year FHA was at 5.95.
I saw that the other day too.
Yes. So, I mean, again, historically, those are incredible interest rates, And what do we have here from your?
So 5.89.
5.89 today.
That's today's right now.
Yeah.
Because the 10-year is at 3.984. So if you're watching, anybody out there want to know which way the interest rates are going to go, watch that 10-year Treasury note. And that moves all day.
And those rates are subject to a lot of information, whether it's,
Yeah, and every lender's will be a little bit different, but it gives you a good ballpark of where likely that's going to be. So it looks like most of those FHA VAs are under 6, and might get some between 5.5 and 6, 5 3/4, things like that, depending on the lender and what the kind of special programs they got out there. So that's a good thing.
Absolutely.
Yeah. So I've heard that too. I heard that some people want to wait. The thing is, there's the projected the increase in property value to go up another 2 to 4% next year. And if the inventory goes down or it gets depleted a little bit because the buyers start jumping in, if you didn't buy now, you're going to have a hard time getting your offer accepted next year. If, of course, these are all ifs, if that inventory goes down and you've got competition again. And ideally, it's just to kind of stay steady, right? The inventory stays steady, and then it comes back to a normal market, which I say the normal market was back like 2019 and prior to that. So there was just a good amount of homes for sale. Interest rates were normal. I'd say they were normal, whatever normal is. They were around 5.5, and I think if they get to the mortgage rates get to that 5.5, we're going to see a healthy market, and there's going to be an increase in home values. So what I've heard recently says, buy now, refi later. Okay, so if it makes sense to refi in the next 6 months, 12 months, 2 years, or something like that, then go ahead and do it. You're not going to miss out on a good interest rate, but you'll get in before the prices start going up again, because right now they're kind of been flat-ish the last, I don't know, 5-6 months, maybe a little bit more, right around there.
They've definitely plateaued.
So, yeah, they plateaued, except that there is none of this. There's this and then that.
Exactly, yeah. It looks like stairs. It doesn't look like,
I don't think
roller coaster.
I was thinking about this morning. They were talking about the 2028 Olympics coming to Los Angeles, right? And a few years ago, I thought this was, I didn't have a crystal ball, of course. I wish I did. Everybody wished they had a crystal ball. I really felt that at least in California, that the home prices were not going to go down until at least after the 2028 Olympics, because they're going to have a crisis right during the Olympics. They're going to do everything they can to keep that from happening. But it's like, I don't see anything that could stop it unless there is some kind of external catastrophe that affects everybody, not just California.
Yeah.
And then I don't know how far past 2028 that the prices would correct. We'll say that. I don't see it. I don't see it for a while. So
some buyer sentiment I've heard is, well, I want prices to come down and rates to come down. And I'm being gentle, right? But when I'm talking with them in person, but in reality, that's the exact opposite of what happens because, simple economics, rates come down, more buyers enter the market. More buyers enter the market, reduces supply for that number of buyers. Therefore, price increase.
I have a friend in the Middle America. He's in Nebraska, and we were talking about how the California housing market affects the rest of the United States. And this is my personal opinion on this, okay? When it's nuts in California, the prices are going really sky high, and people sell, and then they go into any other state. Multiple Californias going into other states drive up the prices. And these local communities, I've talked to multiple people that have said this, that they don't like it when Californians come into their community because they drive up the prices. And I've heard this multiple times over the years, not just this last time. And the converse applies too. When real estate in California is soft, everybody else feels it too. So if you're thinking about investing in another state, it's like now's probably a good time to do it too, because when California gets cooking again, the prices are going to go up everywhere. It just happens.
Yeah, I've talked to some people who own properties, in different states, and they mentioned, like Boise, Idaho, before COVID, right? It was a beautiful, great place to live. It still is a beautiful, great place to live, but the values there shot through the roof, of course, because what do Californians want to do? They wanted to leave here, go somewhere less crowded. And they went to Boise, right?
And they got a bunch of cash in their pocket so they can buy whatever they want.
Exactly. Yeah. So that happened there, Nashville, both Austin and the Dallas-Fort Worth areas. I know there's a ton more that I can't, think of off the top of my head.
Nice metropolitan areas. And even on the outskirts of the metropolitan areas, it just goes up. There's more money, more influx of cash coming in.
Exactly.
Not only because of California, but it's a big one. Our economy here is huge.
It is.
That's it. So is it a good time to buy? Yeah. It's almost always. There was years ago. I was, I say this, I can't remember if I said it on the podcast or not, but my wife and I bought a home in 1989. And it was like $165,000. Okay, it's a long time ago. Okay, but the interest rate's at 10 3/4, so it tells you where it was. And then we paid $165 for it, and then it went up to like $220, $240 because it was brand new construction, and every phase was going up. And then we had a correction in the market. And then my $165,000 house was worth $129,000. I said, "Oh my God, we're never going to get out of here." And we stayed there and we stayed there and stayed there. And over time, it came back. So whether you're buying now or later and you hang on to the property in California, it's going to come back. I don't see it going down anytime soon. It's not going to go up 20% 2 years in a row like it did 2021, 22, right around there, because that was nuts.
Mm-hmm.
And it may do it sometime in the future. I don't think it's going to be any time in the next couple of years. I mean, housing's already a little bit overpriced, especially where the interest rates are.
I had seen and read a little bit of some different economists' projections for the housing market over the next 12 to 18 months. And like you said already, between about 2 to 4% expected, increase in housing prices, which is very healthy with, I mean, it's lower than average. What's average? Like 7 prior to COVID?
I would say right around 5. I don't know what
5.
the average is,
Okay.
because I mean, I say this, you can't see it if you're just listening to this. I'm waving my hand, but it goes from 0 on a diagonal line to say 1900, the year 1900 to the year 2025. Okay, it's good. The 0 is at the bottom, and 2025 is you take a 45-degree angle and it goes up. But on that 45-degree angle, the economy goes up and down, up and down, up and down. All right, and the prices of homes follow that up and down, up and down. Over time, it goes up. In between the corrections and the cycles, and the prices of homes go up and down. So over time, real estate's still a good investment. And if you hang on to it for a long enough time, like we did, I was talking about the house that we bought for $165. It went up. The value looked like it was at $240 for the last phase of that development, and then it dropped down to $129,000. We ended up selling it for $325, but it was 13 years later. Okay, so if you hang on to it, real estate, and over time, you're going to get, in California for sure, and get your money back, and then some.
Absolutely.
Yeah. So, and it's time. Time cures a lot of stuff in California, but you can't see that. We didn't see it. We just we can't move.
Right.
We're upside down. I might as well stay here. And then over time, things got better in the economy and our finances and everything else. Then it's like we were in a good position to make that move later on down the road. So, and if you have any questions about, because I've been doing this for over 30 years. Michael's been almost that, because
my whole life,
because I need to take him with me everywhere I went.
Yeah.
Licensed for how many years?
It's gonna be 6 years now.
6 years. That's really good.
Crazy.
Yeah. Again, 30 years of experience. But I only had a license for 6.
Yeah. Side note, something. So I don't know, my fellow Redditors out there, anybody who's even on Reddit remotely, if you're ever very curious, go to check out r/real estate advice. Some of these people in there are crazy. I mean,
you can't believe them? Is that what you're saying?
I can't believe what the heck they're doing, And I get it, tons of people have different situations, that they get into, but I mean, and again, all these people are anonymous essentially online. And some of them are saying oh, hey, I've had my house for 8 months. I'm selling it because I do not want it anymore. They just can't stand the house.
Wow.
And I'm like, okay, that's interesting, and he said, okay, well, how much should I expect to lose essentially, right?
Yeah.
And I'm like, ooh, that's a lot, because you're gonna have to deal with the all the closing costs, and if you have had any appreciation in those past months, which a lot of places haven't, and even if not, you've had loan fees typically, unless you're buying it cash, but this person wasn't. So all those are just fees that are gone.
Yeah, I mean,
the money you've
they
lost.
could write off some of that stuff from their taxes for the next year, but still.
Exactly. I mean, it's still tough. And then someone else in the comments was saying, "Oh, take it from me. I've done that 4 times." I'm like, "What? You're telling me
that sounds like a profitable thing?"
No, it sounds terrible. That he bought and sold a home, didn't fix it up, just to live in 4 times, within under owning it less than 2 years. Which I'm like, that's an insane thing to do.
If you're not,
that's blowing. You're blowing literally 30, 40 grand every time.
Yeah.
For no reason, with no gain.
The only way that would work is if you bought it as a fixer-upper.
Yeah.
And even if you had to pay capital gains on that, if you factor that in there, you might be a net gain on there. But if you didn't do that, if you just bought it at market value and it was already fixed up, and you're going to sell it in 8 months, I don't see how that's going to. That's a negative move.
Yeah, you're literally burning money.
Yeah,
like I said, at least you're burning at least $20,000 every time.
Was it some of those guys that were trying to get comments on there? Is that what he put that in there to see?
Maybe
how many ruffle some feathers? Maybe that's what he was doing.
He might.
That doesn't make sense.
Yeah,
a normal person wouldn't do that.
Exactly, but on Reddit it's called karma farming, because you get up votes and down votes, and you get up votes, you get more karma. It's just like a count of how many up votes you have. He might have been like that, but I don't know. I can't put it past anybody because a lot of people are silly.
I don't know. That's what makes the world go round. I said every time we have a new transaction, it's like it's a little bit different. Everything in there is not everything, right? You got an open escrow, you got a title report, but something in there is going to be different just because people are different. And I said that's a good thing, because if everybody was the same, life would be boring, and we don't want that. We want life to be exciting and have some fun. We just don't want too many drama, not too much drama.
Yeah,
it's just draining.
Speaking of, so no transaction's ever the same, and I would say almost never is a transaction perfectly smooth, where there's like no hiccups, right? It's like, okay, we got into, there's no negotiation back and forth. The buyer submits their purchase agreement, or the agent does, and then the seller accepts it as is, and they do their inspections. They say, we don't ask for anything. The appraisal comes back in at value, and then everybody's happy. Everybody gets all their jobs done, and it closes on time.
Yeah.
I don't know what percentage of transactions that are, but it's
very few.
Very few.
Mainly because there's so many different pieces of that. Okay?
There are.
So you have a buyer and you have a seller. Then you typically have a buyer's agent and a seller's agent. Then you have people that are in the escrow. All right, and you have people entitled. They don't have anything to do with it, but they're doing their homework, and they dig up stuff that comes up part of their job. Okay, and then you have a lender if it's a loan. If it's cash, it's most of the time it's a little bit smoother. But if there's a lender involved, then you have the loan officer, and then the people that are processing the loan, and then the underwriter, and then if it's a brokered loan, then they have to go find a home for it in the open market. And then all of those pieces have to come. And it's almost always, if there's an issue with the transaction, it's because of financing.
Yeah, I'd say probably 70 to 80%, of problems.
And there's people out there doing loans that don't need to be doing loans. I mean, they shouldn't be doing loans. They don't know what they're doing. And it's like switching products in the middle of the stream and adding buyers. And when they said in the very beginning, here's the thing, everybody is approved. We're ready to go. We just need to find a property, and the property needs to appraise. Okay, that makes sense. And then through the transaction, it's like, oh, well, the buyer wants to put more money down. Well, we don't know everything going on your side because they don't tell us the whole truth.
Exactly.
We just know that this is going sideways. There's something else going on. But you know what? We're really good at keeping them all together and getting it closed on time.
Yes.
And then no matter what they throw at us, we got solutions, because that's what we are. We're problem solvers. And it's like people that don't know what they're doing in the transaction. Sometimes it's a realtor. Sometimes it's a lender. The buyer wants to buy, the seller wants to sell. We're going to make it happen. And so that's what we do.
Yeah, absolutely. And sometimes it's, some of these professionals, maybe it's the lender, maybe it's the escrow, maybe it's the title. Some of them just drop the ball sometimes, not on our team. I'm not going to say their name, but
not on our team.
No, exactly. They're not on our team at all.
Different players.
Exactly.
They're different teams, not ours.
Someone made me and my buyers very upset. And I was so furious with them. And they were being very unprofessional.
And we don't show that. We just do that behind closed doors.
Exactly.
And then they all... The other
side. And we ended up still closing. I had to do their job and like 3 other people's jobs and coordinate and make it happen. It took 1 extra day because the person who's a professional did not do their job. I had to do their job for them. So, like you said, we are problem solvers and solution finders.
Yeah, there was another one very similar, about the same time frame. We had another transaction close, and my my client, the seller, goes, "It doesn't make sense that the buyer's agent should get paid the same amount as you." And I said, "Well, I agree. But sometimes it works out that way. Yeah. And it's my job to get it closed. So I'm not going to hold anybody at fault. It's like, all right, you're not going to do your job. I'll do it for you. We just need to get it done because it's not either going to drag on, which just costs everybody money if it drags on. So we don't want that either."
Yeah, exactly.
All right.
I think we're going to keep this episode a little short today. I don't know if you have any quick, items you want to cover, like fun topics you wanted to close out with.
Some fun topic. Not really. I know we got the Halloween coming up. We got Thanksgiving coming up. Oh, I didn't want to say something. Well, as we were, you mentioned something that brought something to mind for me. When we have transactions that close towards the end of the year, just want to let you know, no matter what the time frames say, everything slows down. Okay, if you've got, hypothetically, a transaction went into escrow at, we're going to say November 15th, and then it's supposed to close December 31st. Okay, you either close it before Christmas,
yes,
or try and close it into the next year. Not that it won't close between Christmas and New Year's. Yeah, it's like everything slows down. It's like,
hurting cats.
It's like half. Yeah, it's like half staff. And it's not, nobody's went anywhere. Yeah, they kind of went somewhere. They've got other things on their mind, on their plates. They take days off. People get sick. And you've got 2 holidays in there. you got New Year's and you've got Christmas. That typically nobody works. And about a week before Christmas, it's just like, you really got to stay on top of everything to make those things close on time. So just beware. If you're doing that, if you're closing, you try and close it before Christmas or after the first of the year. And we can get them done before then. I just let you know right now. It's like every year, it's like, okay, it's supposed to close on the 27th. If the 27th was a Tuesday, I don't know what it is. That's like, you make sure everything's done the week before.
Yeah,
okay?
It's gotta be.
People are just gone. They're, like I said, people take vacations. People get sick. They take personal days. I think it's like working with everybody in the real estate world. It's like half staff. Not us. Everybody else. They got lenders and escrow and title and everybody else that's associated with that. And they just want to take time off, which is understandable. But if you're closing in that time frame, be aware that it's tight. And then we got to, like I said, let's get it closed before Christmas. Even then, as people are stressed, right? And people take days off before then and take days off after then. And you have those 2 holidays in there. And it just came to mind when you said something about closing at the end of the year or something like that. Oh, yeah. Everything slows down at the end of the year.
That's true.
If you've got, X amount of days in your escrow, try to bump it up or know that, hey, you're going to have some, hiccups along the way. And we're going to smooth them out. But just want to be aware that as you get close to the end of the year, not our side, everything else slows down.
But that's even true outside of our industry. I've seen the, memes and reels online of people saying like, once the week before Thanksgiving comes, it's them at their desk fake typing. Yeah. And it's just them typing gibberish in to their computer because, people start to check out around the holidays and they check back in around New Year's.
Yeah, it's very common. And I know that we're aerospace heavy out here in Antelope Valley, and they get the time off. I think about a week before, not all of them, a lot of them, the week before Christmas and then the week after Christmas. It's like 2 weeks off, kind of like teachers. And that's a good chunk, right? We got teachers and aerospace. A lot of people that are out doing there. So if they're out and I got to work, I'm going to take off too. Not me.
Just, sentiment.
In general.
Yeah, definitely.
That's it.
What about our event we're having?
We are having an event.
Yeah.
We're going to throw it out there for everybody?
Yeah, why not?
All right.
Because if you guys...
special instructions for people watching the podcast. We're having a pie and wine event at the Hier Advantage. and this is for our friends and family and clients. Everybody's watching our video here. You comment to us, myself or Michael or the Higher Advantage, and we'll give you an invitation. All right?
Yeah, come by. Even if you're only going to be 5 minutes, let us know, and let us know apple or pumpkin. We'll have an apple or pumpkin pie ready for you to take home. And if you want to hang out, have a glass of wine with your favorite team.
Yeah.
These guys.
And then even if you don't want to have a glass of wine, we're going to have non-alcoholic beverages too. Some little finger foods and things, and just chit-chat. And come on, check us out.
Awesome.
All right?
That was about it.
That's it. Well, then I'm going to sign off then. So remember, for higher expectations and higher standards, choose the Higher Advantage, real estate, sales, and service. Take care. Be safe out there, and have a great day.
Have a great day.